following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their own opinion according to their belief system. So whatever they think about you is not about you, but is about them. That's a wild one, man. Market-wise, let's take a look at it out here. We have the Dow Industrials up 5, NASDAQ up 18, S&P's flat, gold contract up $4.40, trading at $11.93 an ounce. Silver up 11 cents, $14.44 an ounce. Light sweet crude up 56 cents, trading $74.85 a barrel. Well, the API numbers out this afternoon, folks, at 4:30. Notes and bonds. 10-year note up 3 ticks, 117.26. 30-year bond up 24 ticks, 137.25. King dollar down 71 ticks, trading 95.365. The euro is trading at 114.94 to 1 US dollar. The yen is out here trading at 113.05 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, this is going to get wild watching this whole thing shake out, folks, because what you have, this is kind of setting up like a classic, and we'll see whether we're going to get an ABC structure on the way down. So what you have is this. You know, SPY's trading at 288.03. You're off the high of 293. Come down with volume. Bottom line, you get a bounce going out here today. Now, the intriguing thing out here is this, is that the market itself can't even get over the highs or stay over the highs of the high of yesterday. That is 288.22 inside the SPY. And if that's what we got, your probability is pretty high that we're going to go right after the lows ASAP once again, and we'll find out if, in fact, you got an ABC structure on the way down. All the indices are set up just like this, too. If we go over to the Qs and we take a look at the Qs, what you're going to see, the Qs are off the high of 187.53. We got down to a price point of 176.93 yesterday. Bottom line, you're at 179.88, and 180.64 is the number. And the volume's not even come close in the next 60 minutes. The small caps, same setup in the small caps. Now, the small caps, if this is an ABC structure on the way down, it's a monster, man. I mean, the bottom line is that you're dealing with, if I do it conservatively, you're dealing with 171.82 as your A point. Your B point down here is 160.55. So we'll ballpark it at basically 11 bucks. If you see is today, then you're talking about a 150 price projection, which if we take this back, what you're going to see, I believe it's 158, 153 is the high of the low of February 9th. And February 9th, folks, is the benchmark in all these indices. And it's going to be intriguing because that is the high volume low that the indices themselves have not tested yet. And many of the equities have. You know, when Google took off, Google's one of the first ones to test it. And that's, once it tested it, it took off. Gold contract. What do we have with the gold contract? Gold contract basically been trading sideways. It's going to need volume. Bottom line, you're at 1193.20. What you do have here is that all of this had to close inside of is the 1192.80 mark, I believe. 1192.20. What 1192.20 is, that was the strength that was developed last week on the 2nd of October. That's when gold went from 1192 to 1212. We did 365,000 contracts. Yesterday, we come down to 1186. Pretty cool today. You get down to 1186.60. Big contraction of volume. Yesterday, we did 320. Today, or 232, we'll do about 240 maybe at the most. So you have the rejection. Now, let's go to the silver market. We take a look at silver. Silver had done the same setup yesterday, meaning went downtown, had lighter volume. Today, silver is up 0.7%. We've done 61,000 contracts. That got below the low, which you wanted if you're a bull. Bottom line, the low yesterday was 1428. We got the 1428. We actually, this is pretty amazing, actually. It hit it right to the 1/100th, okay? Bottom line, you get lighter volume. You're going into the strength from the 28th. This wants higher price also. And if we swing right and go to the good old King Dollar, bottom line, King Dollar, folks, should have been able to make it to its high without even blinking. Bottom line, what has happened is this, is that King Dollar, so the high in King Dollar is August 15th. August 15th, we went to 96,450. We pulled back down. You pulled into the strength. He had huge strength on June 14th. Bottom line, stopped it dead cold. You do a bounce again. Now, we did this bounce. You have a seller up here, man, and this seller's a trip, too, because the bottom line is that the way that note and bond market went, this King Dollar should have went to the moon in about a heartbeat. You could see it yesterday. What happened yesterday is that King Dollar got up to 95,705. Now, it was a holiday yesterday, so we only did 12,000 contracts. It gave it up on price. Today, you had a full trading day. You're still only doing 21,000 contracts. You're going into 25,000. Couldn't handle price. They waited till it got up there. They sold it down. Bottom line, King Dollar looks to me like if we take this back, King Dollar is going to try to go back inside its lower trading range. And if we pull this back, what you're going to see, King Dollar's been dealing with this for quite some time now. What we're dealing with is the highs of October of 2017. And on the continuous contract, that's 95.07. And right now, we're at 95.375. We've been up at this level now, folks. This is the 6th month we've been up at this level, and it hasn't been able to move. You know, and that's monster divergence. When you have an aspect that the rate structure has gone up so dramatically, so fast, and King Dollar can't go along with it, bottom line, you have sellers up there, and we have something else that's happening out here, and we'll find out pretty quickly. Some of the high-volume equities. What do we have out here? High-volume equities. You got Advanced Micro up 76 cents. You got Starbucks up $1.22. You got Bill Ackerman that's taking a position in Starbucks, gives it a little pop. We have Facebook is up $1.50. You get General Motors down $1.57. Our phone number is 877-927-6648. Dow Industrials right now up 4, Nasdaq up 16, S&P's down 2. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 877-927-6648. Let's go take a look at Pacific Ethanol, if this is Pacific. Let's see. Let's see, Pacific. I've never looked at this. So what's going on here, folks, is that Trump just ordered year-round use. I can't find it. Well, if we get over to the con market first, he ordered, he'll have the announcements tonight, but it just came out right now, that it's going to be year-round use of E54. Is it? 1 second, here it is. E54 ethanol on a year-round basis. So if we go over and look at this, so this is going to get interesting. So the futures market is closed right now inside the con market, folks. But what you can expect, this is going to put a little pop in the con market. You know, this has been bartering for a while. You're going into basically a downdraft at 366, but it looks like bottom line is that there's going to be some action there. If we go over to, let me see, Great Plains. Green Plains, was that yesterday? It's interesting. This hasn't moved yet. Let's look at this one for a second, okay? Thanks, Z. So it's a blend, 15% ethanol inside gasoline. So if we look at this company, let's see what Green Plains is. Green Plains own, operate ethanol plants located in the Midwest. So the low is 15, the high is 21. So you had some action out here today, but bottom line is that still hasn't done a thing. We'll see where this ends up shaking out. You know, when this just came across the tape, yeah, you got a little pop from $17.60 to $17.98. So we'll see where the rest of that shakes out. But I believe that the statement is out right now. Yeah, this is Dave. Dave White. This is. Oh, I see. There we go. Thanks, Dave. Pacific Ethanol. So this is up 10% right now. They produce market low carbon ethanol. The low's $1.55. The high's $5.60. Yeah, this popped. Okay, so this popped. This just went from a 240 to, look at that, man. Oh my God, that's a move. 240 to 2. Yeah, this just popped now. 240 to 290. It also went topside yesterday. It ended up closing yesterday at 324. Let's take a look at this. Okay, yeah, so that popped yesterday. So this news was out here yesterday. And if we pull this back a bit, be interesting to see what happens here, man. This is an equity that was trading at 1095 going back to 2016, December of 2016. And technically, if we do look at this, let me pull this up. Yeah, this is a decisive break, topside. You know, so what you have is this. This is breaking the whole downtrend that started out here December of 2016. Something to keep you on your radar. There's no doubt about it. You know, so let me see what kind of revenue these guys take in. So, yeah, plenty of revenue, man. So they were on an uptick anyway. They were at 1.1 billion in 2014. They did 1.6 billion this year. So I suspect we're going to have more action in that arena. Some of the higher volume equities out here. Well, actually, let's go to Tesla. Yeah, so Tesla's going to bounce out here today. And if we take a look at this bounce, Tesla, what you're going to see, it's just like the rest of the market. Bottom line, you're up $12. Tesla is hammering its lows. This looks to me like, bottom line is that you're setting up, you're building cars to get down and stay under this 244.59 level. In fact, we haven't made it yet. No, we haven't made it yet. So that's your high volume low. The high volume low is laying out there, 244.59. I expect that baby is going to get hit. We go inside the NDX 100. We take a look at the strength versus the weakness out here. Tesla is the strength out here today. That's up 5%. BioMarlin is up 2.8. You get Netflix up 2. Taken away from it, American Airlines is down. That's got hit. Let's see what's going on there. That's down 6%. You get Seagate Technology off 4. You get Liberty Media down 3. So if we go over to, let's go to Netflix first. We take a look at Netflix. What you have with Netflix, bottom line, dead cat bounce also. This thing wants lower price. You know, if we go overseas, folks, what you had happen out here, whether we start in Asia last night, bottom line, those markets continue to get hit in a big way. If we go into Europe, what you're going to see, and this is a one-world market, if we go into the FTSE first, you're going to see you get a heavy breakdown. That FTSE right now, that has gone from a price point out here of 7,900, hit a low today of 71.84, and bottom line is that you are breaking down, and you're breaking down with some real juice. You know, it's broken all its averages, moving averages, that is, that folks that look at that. The DAX in Germany, same setup. Now, the DAX in Germany, we got to 11,807, 803, and we're going to get a good idea of, is this going to be a dead cat bounce coming out of here or not? You know, we got to that low today of 803, and then you roared back about 150 points. That being said, you know, we'll see whether that's just going to be a dead cat bounce. The thing that's intriguing right now is this, is that, let's go to the 10-year note. The 30-year bond definitely got a nice bounce going. 10-year note also looks like it has one going. And if that's the case, what we're going to basically see out here is that, okay, we get a bounce going. The real question is going to be, is that bounce going? So the 10-year has just gone from 120.20 down to 117.15. You have 1.7 million shares traded today, contracts traded. That's saying a bounce is going to get going. The real question is going to be on this bounce, is that a larger ABC structure on the way down? Is that bounce coming into play because this market wants to go further south? And as we go further south, folks are just going to basically pile into bonds just to basically put money in a safe place for a certain period of time. That's all game on the table. King dollar, as I said a little bit earlier, can't handle price, can't hold price. That says quite a bit in itself. The IWM wants this to break this 200-day moving average. It's going to be wild watching this thing shake out. It looks to me that we have large ABC structures on the way down. I don't think it's going to go after the B point today. but it looks to me like we have that C point set up, because what we have had is that if we look at the trend or the tick, bottom line, there hasn't been a real panic out here. And bottom line is that depending, you know, if you're in the small caps, or the high growth stocks. So thus far, what you've had is this: the small caps and the high growth stocks that have gone up really well. Those are the equities that have got absolutely smoked. And of course, then what ends up happening, you know, you don't know whether it's a chicken or the egg, because you're selling the equities, they're going to sell the ETF structure that is wrapped around the equities. They sell the ETF, they're going to sell the equities that are inside the ETF. Dow Industrials right now down 40, Nasdaq's up 2, S&P's off 7. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 36. You get the Nasdaq up 2. S&Ps are off 7.5. And if we go over to PBG, folks, and take a look at it. So this company here, PBG Industries, Pittsburgh company, huge company. Bottom line, they're in the coating business, the painting business, all of the above. The low, hitting a low out here today, $98. The high is $122. This thing is taking a little beating, no doubt. It gapped lower. And when you take a look at this, we are talking like monster companies out here. You take a look at the revenue, you're going to see we're talking revenue of $15.5 billion. Where the revenue comes from, okay, you're going to see the Americas, $7.8 billion. Emerging market 4.4, Asia 2.5. Now, what happened out here is, number one, they come out and said, okay, they're going to have little problems in paradise. Nothing really dramatic, but this is how this shakes out. So PPG Industries sunk the most in 2 years after saying rising expenses and soft demand from China squeezed third quarter profit. Cost increases for the oil-based raw materials and freight transportation worsened during the quarter, resulting in the highest level of cost inflation since the cycle began 2 years ago. The paint maker said in a statement previewing the financial results that are due later this month. So this was a warning that was coming out. PB&G also said it took a sales hit in automotive touch-up paint. PPG warning rang alarm bells in Wall Street as investors watched for threats of expectations that industrial companies will post double-digit earnings growth in a quarter, and the quarterly financials due this month. Any profit drag from rising trade tensions between the U.S. and China would also likely to spook investors. Raw material inflation has worsened, including higher epoxy, crude oil, and logistic costs. Seaport Global analyst Michael Harrison said Tuesday in a note to clients, "We think this will have a negative read-through for much of the chemical coverage, particularly companies in the coating space." Okay, so check this out, folks. This is how this flies. The spread, well, and what does happen is this, is that if we look at every company in this space today, they're all down. The bottom line is that, well, Sherwin-Williams, that's trading down 4%. You got... was it down 4%? Let me make sure of that. Yeah, you're down 4%. Bottom line is that you got all these paint companies down. You got the epoxy companies down. You got the coating companies down. There's a monster business, folks, in water mitigation. That's what, when you start reading epoxy inside this and crude oil, this is where this goes. It's a huge part of the business. You know, for you and I, what we do is that we use, of course, paint in the house. But when you have commercial buildings, that is what they're using. Now, what you're going to see, and this is what they're talking about, I suspect, inside these numbers. These are all chemical plays. And what happens with a chemical play, there's two parts of large industrial buildings. What they're doing is they're taking one part of epoxy, they're taking a second part, which is a hardener. They put those babies together. That is what basically takes care of water mitigation, which is the most important part of an industrial building, okay? That being said, this is what's going on. I don't know what the exact half structure is, but most of that, first off, is made in China. That's the cheapest the chemicals are. They ship the chemicals over, and bottom line, I expect more than likely what we're seeing here is that that's just going to basically hit their bottom line. The spread, I can tell you this, the spread in that business is a great spread, though. They can afford to take some hits. The real question is going to be, number one, what is the hit? And then number two, when I'm actually looking at their revenue model, you know, they do $2.5 billion in Asia. Emerging market is 4.4. I can see that going down. Well, actually it is. The emerging market has decreased to 1% per year. Asia really is not growing. In the Americas, they're still growing. That's probably, I wouldn't doubt that in the Americas, folks, that has a lot to do with Amazon. They're building so many warehouses. But if we take a look at the equity, you're going to see the equity's down 10 bucks, 11 bucks almost. This has been in a huge consolidation for a long period of time. You know, so it also it's laying out here with 82 bottom. That is the bottom of the consolidation. This has been in a consolidation now since April of 2014. So 4 years you've been in a consolidation. And, you know, we'll see if there's going to be more destruction out there. If we go to Sherwin-Williams, the company that we're definitely used to, because it's such a retail company, SHW, that's down 18 bucks right now. SHW. Okay, so we pull this baby up. That's going to be, it's close to an ABC down. Let me put this on a weekly. Okay, so I'm actually going to put it on. Well, listen, it's about time they got to pull back anyway. Take a look at Sherwin-Williams. I would have loved to own Sherwin-Williams. Sherwin-Williams 2011 was a $69 stock. Last month was a $279 stock. You know, you're talking just a normal correction. You know. So bottom line, a lot of these have gone to the moon. What we will be seeing, and this is where it's going to get really interesting, is that I don't know if, in fact, you know, what the tariff situation is in that chemical business right now. But if the tariff is affecting them, what you'll see next is you're going to start seeing our companies open offshore, close to us. They'll import from China into a neutral country, mix it there, bring it in. That's going to be the next deal that I suspect is out here inside the supply chain, folks. You know, and more than likely, you know, we'll see whether it really depends where they are. The East Coast companies would go to the Caribbean. The West Coast companies would maybe go to Mexico. Wherever there'd be a neutral deal, bringing something into the country. That's how that's going to shake out. 877-927-6648. We go. Let's go take a look at the E-mini as we come into the closeout here. So you've had a flat market out here today. You know, you're down $7. But this is what has happened, which is pretty wild, folks, is that when I say a flat market, we've had price spread out here. You know, today we had 25 points, S&P points from highs to lows. It looks to me like that's how we are going to be trading for a bit here. Right now, the VIX is trading at 1606. And bottom line, that baby does not look like it wants to back off. You know, went sideways out here today, got to a price point of 1749, high, low 1569. We're just in a different dynamic right now. Now, tonight, folks, at 5 o'clock, I'm Mr. Steve Rhodes, #1 market timer in the S&P, according to Timers Digest, and a new issue just come out today, and he's still the #1 market timer, folks, and that is quite a feat because he's been out there now 4, 5, maybe 6 months. I can tell you, getting it 1 month is big. He's consistent. He's going to be doing a workshop for you tonight. If you're a subscriber, Steve's going to be coming right up. We'll walk you through this workshop. Dow Industrials right now, down 36. NASDAQ is up 7. S&Ps are off 6.5. Stay right there, folks. Steve's coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. So we have the Dow Industrials right now down 53. Nasdaq is up 5. S&Ps are down 8. Let's go over to our man, Mr. Steve Rhodes. Don't forget, folks, Steve does an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, tonight, 5 o'clock, he's got a treat coming for all his subscribers. And you can be a subscriber right now. The way you do that, folks, you come over to our website at TFNN. You're going to see under free featured content, Mastering Probability. I'm Mr. Steve Rhodes. You'll see live event tonight, 5 p.m. You just hit that banner. Bottom line, you hit subscribe. You can subscribe for a month, 6 months, a year. All of them, folks, come with a 30-day money-back guarantee. You have nothing to lose, everything to gain. We got our man, Mr. Steve Rhodes. He's going to talk to us about what he's going to be teaching tonight. What's going on, brother?
Well, I'm not having to prepare for a hurricane. How about you? What's happening over there?
We have one of our employees is up there. She already had to leave. Yep. Angela already had to leave. Yep. So it's, yeah, I know.
Are you guys going to get brushed with anything, or?
No, we aren't. But Angela's in the Panhandle. Yeah. So they got out of there this morning because it's going to be serious business, folks. Unfortunately, for the Panhandle, you know. So.
They always are, but we can plan for it, and that's the beauty of it.
Yes.
Because you can get out of the way of it and plan for it.
That's right.
And tonight's really about planning too. Planning from the standpoint of being able to teach clients, subscribers about really several things. Tonight the focus is going to be on one of your favorite patterns, the A to B equals CD pattern, which is a great tool for helping us to identify where price is headed to. But
yes,
I really want to be able to teach subscribers how to actually master that pattern. But you know what it's really all about, Tom? And this is the beauty of the network that you've set up here for everybody that's listening in. And I remember a couple years ago reading a Forbes magazine, and I don't recall what their celebration was, but the one quote that had always stuck with me was from Warren Buffett. He said that there's one investment that supersedes all others. And I think if you and I think about that, there's no question about it, which is investing in yourself.
No doubt.
And actually, I'm here today talking to you because I decided all those years ago, 12 years ago now, I think it is, to invest in myself and sign up for your Master Trader course.
Yeah.
And had I not taken that step, a pretty good chance that you and I wouldn't be talking, pretty good chance that I wouldn't be the #1 market timer, pretty good chance that they wouldn't be doing the radio show, wouldn't have the, you have to find some place to take that first step or to continue taking the steps that you've already taken, by investing in yourself. So that's really what tonight's workshop is about. We have a number of subscribers and TFNN listeners that have taken the steps to either go through a free trial of Mastering Probability or our long-term subscribers, and this is my opportunity to be able to teach them many things about this pattern. But if you can just take one of the elements that I'm going to be able to teach folks, there's always even I go back, I don't know about you, but I go back and reread things that I know many times just to see what was it that I missed the first time.
No doubt, man.
Right?
I mean, that's what's so exciting about the market. You learn every day, man. Every day. Every day.
And that's probably the coolest thing about what you and I do is that each day it's brand new, right? We're not coming to work, and it's the same thing that it was yesterday.
No doubt.
I mean, it's always testing us.
You know, it's hard to believe it's 12 years, man. That is so cool, man. That is so cool.
Yeah, just like that, just like that. This was one of the first patterns, you know, because you were teaching us about swing points and volume.
Sure.
And so in order to master the A to B equals CD pattern, you have to be able to identify swing points. We'll certainly go through that. You use those to be able to draw the A to B equals CD pattern. There's a certain way to draw it, and there's a certain inference and information that the market is always telling us with regard to where a price is trading along that C to D line. We'll talk about Fibonacci retracements and expansions. We'll talk about what I consider to be kind of like the secret sauce of this pattern and really any other pattern, which are Japanese candlesticks. So we'll do that for an hour, question and answers and so forth. And then what subscribers also are gaining access to are 4 other very valuable workshops. And I think this is one of the most valuable workshops. Another one that's available to them, it's titled The 5 Reasons Traders and Investors Fail to Spot a Bear Market. But what is inside that workshop, Tom, is a 5-step process for how markets make tops and bottoms, how to be able to sell a top and how to really be able to buy a bottom.
Yes.
With this one tool that I developed many years ago. I'll teach folks about my black box system. That's a set of tools that I've used that everything that led to become the #1 timer, I incorporated into a scanning system, and it makes it easy for clients each morning to understand what their different instruments, what condition they're in, whether they're forming a top or a bottom. I'll share with folks my oscillator and change line. So there's more than just one thing for subscribers to be able to gain by signing up and getting that free trial of Mastering Probability. And one of the other guys, and I love, and I think as most people do, you start off your show with an inspiring card, or at least something to think about.
Yes.
And one guy that I like to read his stuff, and every now and then I just pull out the book and just start reading through it, a guy by the name of Jim Rohn. And he's taught me a lot just through his teachings out there. And one of the, I came across this over the weekend. And one of the things that he shares with folks, he's passed away, but he said, every day, stand guard at the door of your mind, for you alone decide what to let into your life, which will shape whether you feel rich or poor, cursed or blessed.
What a great saying that is, man. That's,
and I can tell you, Tom,
our mind is a door, folks. It's
totally,
a fact. Yeah.
Totally.
So cool.
And I am so blessed for what you've created here at TFNN, you know, to allow me to have learned, be able to take that, put it into practice, be able to put it into practice, be measured by third parties out there, and then be able to pass that along. It's just how the whole network with inside TFNN and everything grows. So
well,
that,
listen,
in
man,
essence,
you've been amazing. You know what's amazing, man? You know, folks, so the new edition of Timers Digest came out this morning, and Steve's still #1. So how many months have you been #1 now?
Well, since they
and the top
since
for
March,
the year, 6 months.
Since March, since March. They, as you know, they require 12 months worth of data, and they began tracking the newsletter from March of 2016. About 6 months into it, I sent a newsletter off to the guy and said, "Hey, where do I stand? I know you can't report on it, but where do I stand?" I remember sending an email to you or Tommy or both of you, and it said, "You stand as #1. You're #1 in the S&P. You're #1 in bonds. You're #2 or 3 in gold." Now it was like, whoa.
Cool,
hey,
man.
That's pretty cool.
It's
so
huge.
look, it's a lot of work. Markets are always changing. I don't get every call right, but when I'm wrong, you know, we make adjustments, and so I love what I do. I really love the big picture of the markets, and we get to do that each day during the radio show. So it's as you like to say, it's a beautiful thing.
It is.
I hope folks come over, take advantage, allow me to feed their mind just a little bit. There's going to be some great things. It's a great opportunity. All prior subscribers get a chance to sign up.
Exactly. So everyone out there, folks, just come over and sign up. You have nothing to lose and everything to gain. That's the bottom line. It comes with a 30-day money-back guarantee, whether you're a month, 6 months, a year, and really, you're getting 5 workshops in one, which is pretty amazing.
You are. You are.
Gotta love it. Okay, man, we're ready. We're gonna be on Tiger TV, 5 o'clock, watching you, man.
Sounds great. Thanks, Tom.
Thank you. Stay right there, folks. Come right back. You go to TFNN.com. You're going to go to featured content, mastering probability. Hit subscribe, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if you want to see a little rocket ship, just put a little news out here, folks. This is NIO. NIO, they manufacture, sell automobiles in China. Bottom line is that this is a electric car company, battery company, and it was just let out that Tesla's largest shareholder after Elon Musk has just taken an 11% position in this company and just put up $550 million, I think it is. Bottom line is that just as we were on the air with our man Steve Rhodes, the stock just went from $6.28 up to $7.30. And so this is going to get really interesting. It makes sense that bottom line is if you're into that technology, he's hedging his bets right now. And let me just see. So the guy, it's Bally Gifford and Company. Let me just see how this shakes out. So, well, there it is right there. So he owns, the company owns 7% of Tesla. And guess what? They're still buying shares of Tesla. They bought another additional 395,000 in June. bottom line is that now he's going to be set up in both cases. Let me just see if NIO, if they're actually operating right now with any revenue. So, oh yeah, they're taking revenue, all right. Oh my God. So they went from 0 to $4 billion in 1 year. Well, actually, last quarter they only did 46 million. They're supposed to do 1.2 billion next quarter. Imagine going from 46 million to 1.2 billion. Sounds like a pot company, man. And then next year they expect to do 17.3 billion. Well, they get their work cut out for them. I can tell you that. That is one monster number. There's no doubt about that. As we get into the closeout here, looks like we're going to have a flat market, folks. You get the Dow Industrials down 37, NASDAQ up 4, S&P's off 7. When we take a look at these indices, they look that they've all set up ABC structures on the way down. They try to get to higher price, didn't have the volume, can't close even above the highs of yesterday intraday, which is pretty sad. Just bottom line, we'll see how this baby shakes out. To recap out here, we have the Dow Industrials down 41. NASDAQ is up 4. S&P's off 7. Stay right there, folks. Coming back with some numbers after the close. Don't forget, I'm Mr. Steve Rhodes. Great workshop, 5 o'clock. Come over to our website. Sign up right now at TFNN. Go into featured content, Mastering Probability.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. It's great. Make it a great month. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials down 56, NASDAQ up 2, S&P's down 8. All the indices, folks, they look like they've set up a ABC structure on the way down. If we get over and we take a look at the SPY first, what you're going to see is this. SPY came off its high. The high in the SPY is 293.94. We get down to 285.50 yesterday. Bottom line, you do 68 million shares out here today. You're going into 111 million, and it couldn't even close over the high of yesterday, which is 288.22. So what that sets up is that it's going to go after the low of yesterday. Bottom line, we'll see whether they get the volume. You get the volume, you get a small ABC structure down inside the SPY. NDX 100, the 3 Qs, same type of setup. You get a little bit larger one. The Qs, the top of the Q is 187.53. The low of yesterday is 176. Same setup. You know, you've done 47 million shares, and what's intriguing here, folks, is this: you get a full day of trading. You don't have Columbus Day. Bottom line, we had more volume on Columbus Day than we did today. That's divergence in a huge way. Bottom line, the Q also couldn't hold the high of yesterday, which is 180.64. That sets up a run for the low. Small caps. Small caps have been basically hanging right at their 200-day moving average. Building cause, I expect what we're going to see tomorrow is they're going to go after it. Small caps also try to get to higher price. They got to 162.74, closed at 161.23, and anything under the 162.40, same type of setup. We went up with 19 million. You're going into 21 million. You're going into 20 million. So bottom line, in all those cases, you have harmony in the marketplace. Couldn't hold higher price, had lighter volume. It'll back down and see what it's going to do with the B point on the way down. Gold contract. What do we have with the gold contract? You had a sideways move up here inside the gold contract. Bottom line, you're up $4.80. You're trading at $2.35. And what we do have inside the gold contract is that it's going to be intriguing to see where this shakes out between interest rates and the oil market. Trump is doing a little press conference inside Air Force One right now on the way to Iowa, and bottom line is that his quote is, I think we don't have to go up as fast on rates. And not that hey, listen, when he came out with that, which was at 15:46, 4 minutes of forward, bottom line, you got a little pop on it. King dollar, bottom line, King dollar had given it up today. So what's intriguing here is that you have a seller inside King dollar. And when we take a look at the rates, the 10-year, the 30-year, bottom line, it totally makes sense that King dollar should get higher, while King dollar, each and every time it tries to get into higher price, gets a sell-off. Today what we did, we failed on price, failed on volume. You got up to 95.840, closed at 95.360. In order for King dollar, folks, to be back inside the lower range, it would have to get down into 95.07. So you're approximately 360 ticks away from that level. We'll see whether we get that coming into the market tonight and tomorrow morning. Silver. Silver is same type of setup. Looks like silver wants a higher price also. Silver was up 0.6% today. Bottom line, it got to a lower low, rejected that low, went into strength. You know, we've been down here for a long period of time. None of the metals market has got basically a bid since April 4th. And of course, we're at October 9th. Notes and bonds. So the 10-year note, 30-year bond, both went topside, have volume behind the move. So it's going to get intriguing. Is this going to be the first bounce in the note and bond market? We had the 10-year do 1.8 million contracts. Now remember, the 10-year has just gone from a price point of 120, and we got a low out here yesterday of 17.13. The real question is going to be, are they bouncing because this market wants to go south, or are they bouncing because bottom line is that they're just oversold? Right now, we have the 10-year note trading at a yield of 3.20. The high is 3.24. That high was generated out here yesterday. We take a look at the 30-year. 30-year also got a bid underneath it out here today. Let's go 8 USZ 8. So 30-year goes up 23 ticks out here today. We've done 441,000. That's good contract volume inside the 30-year. In both cases, it looks to me that what they could do is come up to ice. So the first level that you can expect on this bounce on the 30-year, you're talking about 139.23. That's what we broke down. That was the vicious day on the 1st of October. That was some big, big numbers. No two ways about that. Oil. We're going to be coming out with the oil numbers. The API is coming out at 4:30 this afternoon. Bottom line, as Trump was talking out there too, he doesn't like high oil prices. He's been saying that for quite some time. Hasn't helped the oil price at all. This oil price at $75, man, you know, it has juice up here. So it looks to me like not only 75, 76 is game. You know, if we turn around and we put this on a continuous contract, what you're going to see in a continuous contract is that you're at the top of the range. We're at 74.86. The swing high from July is 75.27. Now, what like we have in here, we have a premium built in for Iran. You probably have a premium built in right now because, unfortunately, we in Florida and the United States in general, but in Florida, coming into the Gulf, you get Michael coming into the Gulf, and this baby is roaring in with some big numbers. So the panhandle looks like it is going to get hit. There's a lot of oil rigs out there, and that very well may be why oil is staying up at these higher prices. Volume-wise out here, inside the indices, what we did inside the indices, you did 834 million inside the NYSE. We take a look at the NASDAQ composite. Composite's 2.4 billion. Stay right there, folks. We got our man, Mr. Jason Path, coming back with us. Jason kicks us off every trading day, right here, 8:30 to 9 o'clock in the morning. Great show. He also has a great newsletter. The way you get that newsletter, come over to our website at TFNN. Go into featured content. You're going to see the quantitative edge. Check it out. Comes with a 30-day money-back guarantee. Outstanding newsletter. Jason and I come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials finished down 56. We had the NASDAQ up 2, S&P's down 6. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour. Now, don't forget, folks, Jason kicks us off every trading day right here, 8:30 in the morning. morning market kickoff, outstanding show. And remember, we got a great new website. It's so easy to use on your cell phone. Just pull up TFNN. You're going to get a Tiger TV, great digital programming. Now, as you come over there, under featured content, you're going to see our man, Mr. Jason Path, The Quantitative Edge. It's an outstanding newsletter. You can basically hit that banner. As you hit the banner, you can subscribe, and whether it's a month, 6 months, a year, they all come with a 30-day money-back guarantee, folks. And bottom line is that you're going to be happy that you came over here and subscribed. He has an incredible newsletter. What's going on, brother?
Not much, man. How are you?
Good, man. Hey.
Got a storm on the way, huh?
It's storm on the way. Yeah, well, we're lucky here. We have one employee up at the Panhandle. She's split with her family. She's going in the middle of the state, so that's good. But yeah. When those things come in, man, they come in, especially up there. You know what I mean? So we got a lot of moving parts in this market right now, man.
That's right, man. It was quite a day. It was a fun day. I mean, we had, when we woke up, we had $1 at 96. We had, gloom and doom. Everybody thought tech was, dispersing from the other indices. NASDAQ's up over the S&P today. Dollar's back to about 95.60. Rates came in, so we got a bit of a bid under bonds.
I think Trump's selling your dollar, man.
It wasn't a massive move. But,
no, it wasn't. I'm only kidding. I'm only kidding. There's some divergence there, though. I mean, it's intriguing, actually. You know what I mean? It's like, it's like, okay, man, we got rates going good, and what I'm trying to figure out even today, Jason, is that, we got the bump in rates, and the question would be like, okay, is that because the market wants to pull back more, or are we just getting a bump up in rates? You know what I mean? Well, higher price, lower yield, folks. So.
That's right. We woke up this morning at 325, 326 on the 10-year, and came in. Obviously, bond markets closed yesterday.
Sure.
The holiday, we got. A couple $100 billion to be auctioned this week, so a lot of work to do. But it's like everything all the themes that we had coming into the week. Higher rates, stronger dollar, tech sell-off. Again, not massive reversals in my opinion, and probably some dead cat bounces within there, especially in tech. But all of those things kind of reverse that thesis that everybody was putting together. So it'll be interesting to see how we open tomorrow.
No, we get a real traders market. That's the reality. That's right. I mean, if I'm, each and every day, folks, that this market is starting to basically act, like basically a normal market. That it's not a one-way market, and we've had a one-way market for a long period of time. So
that's right.
It's going to be intriguing watching this. And it would make sense, when I was talking with Ben Lipton this morning, Tommy and I from TD Ameritrade, I was talking about, I hadn't heard this forever, like the Fed taking a punch bowl away, right? And I mean, the reality is that that's what's going on. So the real question is that, are we all going to be able to stand on our own?
That's right, man.
Yeah.
That's right. Folks have stacked a lot of paper on a one-way bet, and it's coming apart a little bit, right? Even within tech, you see dispersion, which ultimately is good. To your point, it's a trader's market, but it's much different than folks have dealt with. We also got some action in commodities. Over the last month, I mean, gas and coffee. I know coffee is not the sexiest market, and gas has been sleepy for a long time, but those have both had 20% moves in the last month, and I've been watching, the gold chart, like watching grass grow. I think that's moved high to low about 3% over the same amount of time. So getting movement in commodities, it's metals week. Obviously a lot of talk about metal at the LME, copper, Chinese dump a bunch of stimulus in. Folks are speculating you can go long copper here. So the commodities are moving as well.
Now that coffee chart's looking good, man. I just put this up. I mean, we just gone from 95 cents a pound, folks, to $1.13. That's a sweet move, man.
Yeah, that's right. Pretty compressed amount of time, and I think it's still got significant headroom. Obviously, a lot remains to be seen, but these next few weeks before the next round of the election, I think it's pretty solid runway. Coffee's a different market. We're very used to some core supply and demand fundamentals, which do play in coffee, but one of the strongest correlations cross markets is just the real and coffee. You can look back as far as you want. That chart is very clean, and we were expecting a recovery in the real due to the political situation clearing up through the election. It's happened. Coffee's bottomed. And it looked, and the other thing about coffee, if folks don't trade coffee often, that thing can rip, man. That thing moves when it gets ahead of steam. So again, a lot remains to be seen, but it's moved, 20% over the last month or so. And it's looks like it's still wanting to go higher.
And, when Jason was talking about, basically coffee and the real folks, this thing, like, we were at 4.2 reals to $1 3 weeks ago. Now you're at 3.7. And so this always intrigues me, man, because all of a sudden in 2 weeks you're back to where we were on May 15th, which is great for the Brazilians. I mean, I'm really glad that it's happening. Do you know what I mean? It's because I can't imagine, like the last time, a few weeks ago, we were talking like we should just go buy a coffee plantation, man.
That's right, man. One of the best investments I was thinking there in a while was a coffee plantation in Brazil. So to your point, it's nice to see it come back around. Next election round is at the end of the month. A lot was decided the other night, though. So I think it's going to be pretty strong from here on out.
For a large country, man, it seems
Brazil's
like
huge.
they're so rich yet so poor, right? That's
right.
just so sad. You know what I mean? It's like, wow.
I saw something the other day. Their agriculture advantage is mind-blowing. They've got oil, they've got agriculture, they've got all the natural resources you'd want. It's a large country, tremendous population, a good spirit in the people. I know that's hard to put value on, but they're great people.
Important. Yeah, I know.
They value the right things. They just politically, that thing has been a mess. They had the dictatorship since the 80s. It's never been. It wasn't right then, but it certainly hasn't been right since.
And then the corruption.
It's a fun system to follow, and we track Brazil very closely. We track the elections, and we forecast elections down there as well.
Yes.
I follow that country closely, because it's so volatile and the drama is so good, and prices will move and the currency will move, and there's a tremendous amount of opportunity down there. But unfortunately, the people have been underwater for a while.
No doubt. And so I have your newsletter up here. Let's talk a little bit about the VIX future historical prices.
That's right. So you've got the VIX moving into backwardation, which if you trade other term structures with futures, that's a fairly bullish formation. There's a 100 to 200% premium on the out-month volatility from here with respect to the VIX options, specifically speaking to the options. So essentially what that's telling you is either folks are way overpricing volatility or the market sees something coming.
That's interesting.
Again, this was the VIX takes time to. You will see spikes. If you don't look at the VIX every day, you'll see a spike and think, that's
sure.
But it builds over time as well. And just like any futures term structure, we follow the oil one closely as well. It's not so much the point in time, it's the speed at which it's the shape it takes on in the trend, and we're definitely seeing a trend towards.
If you're watching Target TV, folks, I got Jason's chart up. That's a trend, man. That is definitely a trend. Stay right there, Jason. Stay right there. We're going to come back. We get oil numbers when we come back, folks. Check out Jason's newsletter, TFNN.com. Features content, The Quantitative Edge. Jason and I are coming right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Jason Path, Tom O'Brien. We do appreciate you growling a problem with us. Don't forget, folks, Jason kicks us off every trading day, 8:30 to 9 o'clock in the morning. Has a great newsletter, The Quantitative Edge, the way you get it. Just go to TFNN, featured content. You see it right there. And, Jason, I have up inside the newsletter this week, the global yield curve. Talk to me about how this works.
Yeah, so it's an aggregate index that JP Morgan puts out, and you're just looking at spreads between the 1 and 5 and the 5 to the 10, just real generic cut points on global debt. It works similar to the United States yield curve, but we're just rolling up a global aggregate index, obviously, again from JP Morgan. And this yield curve, just again like in the United States, when that inverts, when it moves lower, it's a trend. When it inverts, it's typically a signal that you've got issues. We've inverted. We actually did a few months ago, or a little bit ago, on the global yield curve. The other times we did that, it was global financial crisis, U.S. recession, Asian crisis. Really, every crisis that we've had over the last 20 years has been marked with an inversion of the global yield curve. We're at that point again. I think that again, it's the trend as much as this point in time, and it continues to move against global markets as the dollar stays higher, and it's broken record oil prices. But we're just now starting to see, and I talked about on the show this morning, we're just now starting to see some of the cracks showing in the global bond markets. We saw 5 euro note sales pulled last week in Europe.
Really?
5 sales that didn't go forward. It was reported by Bloomberg. With the rise in rate, I mean, this is really before the rise in rate starts to compound problems internationally as well.
So this is this whole deal, like when the tide comes out, you find out who doesn't have a bathing suit on, right?
That's right. Yeah. That's right. And what folks are not going to be able to do now is roll over that debt like they have been the last few years.
Yes.
Dollar liquidity's coming out of the system, more stress, more pressure. It's really, in my opinion, a conflation of factors. So the yield curve moving lower is a signal, but when you pile on less liquidity, no ability to roll debt over like you've had at least, to your point, you really find out who can pay the bills and who have just been able to pay their bills because the conditions have been so extraordinarily favorable. And I think you got a lot of folks that are going to have a lot of issues globally, including, I mean, we've been talking a lot about EM, but we're talking about Europe now. I mean, we had like close to $1 trillion in bond sales pulled last week because they would not have functioned. They wouldn't have been a successful sale. So.
And we had, folks, the DAX in Germany, the FTSE Italy, they're all under all their main averages. I mean, they blew apart. And, you know, we're talking about 50, 100, 200. You name an average, guess what? It's south. So that is pretty intense, man. You know, the aspect of that they can't sell debt is really intense, though, because, you know, what happened, you know, when we looked at our own big malls in 2007, Jason, you know, you know, a lot of folks thought that, hey, listen, those are going to go south in a big way. Well, it was just the opposite, folks, because it had to do with our rates come down so dramatically. As Jason said, they could roll that debt over very easily. And they were rolling it over from 5% to 4 to 3 to 2. You know what I mean? So that kept everyone alive. This is a really cool chart, man. I've never seen anything like this. I really dig this, man. That's a long period, too, isn't it? So it's not like it can flip around and, you know, basically, well, of course it can go higher or lower, but this is a heads up, man, you know?
Yeah.
Wow.
There's no question, in my opinion.
Yeah, no, I can see that. I can see that. So, on the move in tighter global financial conditions, that's for sure. So let me pull this down. We're going through Jason's newsletter right now. And folks, this is one beauty of a newsletter, there's no doubt. Let's go into, oh, China real estate. Oh, my God. Invesco China real estate. What's happening with that?
Yeah, so, you know, we've been short that at various points over the last year, you know, really difficult situation. This is a classic supply and demand story on many levels. The Chinese real estate story to us, and actually the ETF we use as a vehicle, is weighted towards Hong Kong as well.
Okay.
But you have a nasty situation of oversupply and extraordinarily high valuations. And again, you know, with the currency situation there now, you know, we've got a yuan heading to 7. Hang Seng's been under pressure. Equity markets have been under pressure. You're just seeing, in my opinion, a major unwind. And again, the REITs and the equities are under, the public companies are under a two-pronged, really three-pronged issue. One, you've got the market problems. You've got oversupply.
Yeah.
And stretched valuations. Things were built with an assumption that the price is just no longer there. 2, you've got the currency issue, and then 3, you've got your own stock under pressure. There's really very little in terms of a lever that those folks have to pull. That market just has to clear and correct. You know, there's all kinds of crazy anecdotal stories about, you know, folks that were, you know, buying apartments for, you know, 3 and 4x within this last year of what they're being marketed for now.
I was going to bring it up. They had riots there yesterday, folks. Okay?
Yeah, that's right. I mean, these are legitimate stories. You know, entire communities are like, you know, to your point, rioting because, you know, 9 months ago, they spent 4x on an apartment, or 4 times what it's being sold for today. It's getting nasty over there in the real estate, and it's as much Hong Kong on the valuation side as just kind of the Chinese oversupply situation. So
that's going to be wild watching that thing shake out. You know, because we've had that before. You know, we've had, and what seems to happen, folks, what China has to always worry about is, you know, there's so many people that the social unrest is a big deal. You know, so we'll see where it shakes out. But when I saw that yesterday, what was the name of the week last week? Whatever, they have this full week, folks, and they get off. And that is one of the biggest buying times for real estate in the country. And as Jason just said, there were people that bought, with a couple of stories, there were people that only bought basically 6 weeks ago, and now they're selling units at 25% less in 6 weeks. You know, and
your
Golden Week. Thanks, Z. Golden Week. Yeah, Golden Week. All right, man. Yeah.
And your currency's worth less than it was too, right? You've got the currencies. You got stuff that was built, you know, and the currency's devalued 10% since then. It's just it's a bad.
Pretty intense.
It's a tough situation,
and you know, what I realized is that we won't have the oil numbers, folks, because guess what? Monday was a federal holiday.
That's
so the API will end up being out tomorrow, and then we'll get oil and gas on Thursday, and they'll keep gas the same at 10:30. They'll get oil at 11 o'clock. That good old Columbus Day fooled us, fooled me for sure. So what do you think, you know, this oil market, well, I guess, you know, with this storm coming into the Gulf, man, I mean, there's a lot of rigs in the Gulf, so I can see why it's staying at 75, you know. You see that Trump just come out and said that they're going to put ethanol year-round now. That's going to help. It should help the corn market tomorrow morning, I guess. You know.
That's right. Yeah, he was. I believe he was out in Iowa.
Yes.
Or he'll be in Iowa soon. They wanted that story out there. That's a huge deal. I used to live in Nebraska, as you can imagine, a massive deal out there politically. But
huge.
Yeah, I mean, they still have a couple of levers. I think they've taken the SPR release off the table, and I think everybody agrees it's, you know, maybe $1 if they release 30 million. I don't think that's a relevant possibility. They could sign a waiver at any time, and they'll still allow folks to import Iranian oil. There's some reporting in Reuters about that over the weekend. I've continued to believe that is a material probability. I don't know that I would bet on that actually happening.
They need a payment system. Europe needs a payment system, right? That's going to be the deal. What's the payment system to skirt the rules, right?
Right.
Listen, folks, every trading day right here, 8:30 to 9, outstanding show, morning market kickoff. It's got a great newsletter. Go to TFNN.com. Featured content, quantitative edge. Have a great one, man. Have a safe one. Look forward to the show tomorrow morning.
Can't wait, man.
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at PPG Industry. So this baby came out with a warning this morning, folks. Stock get taken to the cleaners, goes down $11. You're at $98.56. That being said, guess what? After hours here, you're trading up $4.50 at 102. And what this is all about is that you get a large fund that is taking a stake in it. So let's see. Tran held a 2.59 million shares as of June 30th. So what we have out here, PHDC, you get the 13F filings, excuse me, folks, that are coming out. Bottom line is that now the thing caught a bid. That being said, the thing that's so weird about it, folks, is this, is that, let's see, June 30th, well, that's not that bad, actually, because the bottom line is that June 30th, the stock was down at 101. Down at 101, gets up to a price point of 116, excuse me, folks, and then basically goes south today. And you know, when I brought this up earlier, this is a large consolidation, and it's been in a consolidation since 2014. The bottom of this consolidation is laying out here at 82. The top of it is 118. And when you look at a consolidation like this, it makes sense, because if you look at their revenue and earnings per share, you're going to see that they're just steady. In 2014, they did $15.4 billion. This year, $15.5 billion. Next year, looking at $15.9. Bottom line, you know, you get a steady performer out there. To the bottom line, it seems like they're always taking it about 550 to 580 into their bottom line. So we'll see how that whole thing shakes out. Papa John's, I believe that same company came into Papa John's out here too. So Papa John's was up $4.48 today. Let me see if this went intraday. No, it went right from the get-go, because you did have PHDC. When I'm saying PHDC, that's just a symbol to bring up the 13 Fs. And let's take a look. Well, I can't even see them in the top. But bottom line is that also, I believe, came in, let's see. Yeah, so Papa John's jumped 8.9% after a report that Tyran Fund Management and other parties are valuing a takeover bid for the pizza chain. And I believe that this company here, they're in the food business too. I mean, they basically like the food business. Oh, Wendy's, that's who they're a big investor in Wendy's. You know, so bottom line is that when you're in that same type of business, that does make sense, because operationally, that's what they're looking at. Let's go to our man. Oh, he couldn't hold on the line. Okay, so we're talking Paul and Henderson. He was looking at NIO. Now, this is a big story out here today, folks. This is what you have. NIO went up $1.35. NIO is a manufacturer in China. Bottom line is that they're talking about electric vehicles as well as battery charging stations. They just, bottom line, new company. They went public in the U.S. Let's take a look at this. September 12th. They went public at $6.26. And number-wise, what they're looking for is pretty intense. They're looking for, they did $46 million last quarter. Next quarter, they're looking to do $1.2 billion. The following quarter, $2.8 billion. The next year, $17.3. We'll see if, in fact, they can do something like that. But bottom line is that what the news is about, so this equity was up $1.35. Thanks, Jim. Appreciate it in the den. Now it's trading $7.99. It's almost at $8. And what the news is that the second largest investor in Tesla took an 11% stake in NIO. Bally Griffith disclosed that it owns 85.3 million shares in a regulatory filing this afternoon. That filing is worth $515 million, and this little baby just did a rocket ship, folks. Because picture, today the low of this was $6.10. It's trading right now at $7.99. And if we go over to Tesla, what you're going to see, so that company now owns 11% of NIO. And if we go over to Tesla, and you're going to see after Elon Musk, this is the second owner. I believe it was at 7% when we brought this up a little bit further. Yeah. So Musk owns 19.7%, or 33 million shares. This company owns 7.7%, or 13.1 million shares. bottom line, spreading the bets out. The real question is going to be, of course, does this company start moving out of Tesla and into NIO? We'll find out. The thing that's pretty amazing, if we look, I just went through those numbers with NIO, right? And you're talking about billions and billions in acceleration. Well, Tesla plans on doing $20 billion. Let me pull it up. I'll get both of these screens up so we can get this straight. Okay, so if you believe what the CEOs are telling you, this year, Elon Musk plans on doing $20 billion. This year, NIO plans on doing $4 billion. Next year, Tesla plans on doing $28 billion. NIO plans on doing $17.3 billion. Tesla supposedly going to be profitable in 2019, $3.19. This company is going to be losing $7.30. And let me see, shares outstanding. So you have 745 million shares outstanding in NIO. And if we take a look at Tesla, you got 170 million. That's it. Yeah, only got 170 million shares outstanding. That's pretty good, actually. Pretty amazing. Man, Paul from Henderson, Nevada. Bottom line is that, yeah, you know, this will turn into a sweet little day trading stock. There's no doubt about it. You know, it's a one-way rocket ship out here today. Goes from 618, goes to 739. After hours, it's at 795. And bottom line is, if you're day trading it, you just be as careful as you can be, because that little baby has volatility. But we are in a market right now, folks, with high volatility. This volatility is not going to stop. That's the real bottom line. We'll see how this shakes out overnight. What I expect we're going to see over in Asia tonight is that you're still, you know, we've had flat markets, but Asia looks to me like it's still going to have some big problems. Those markets have gone down real dramatically. The UK and Britain, the DAX in Germany, they came down today. They broke some lows. They rejected lower price. So they might get a little bounce out here tomorrow. What's going to be intriguing is to see how the dollar trades tonight, because what we did have out here, nothing heavy, but bottom line is that when Trump was on his way to Iowa, he was basically saying, hey, listen, man, we don't need rates to go up as fast as they've been going up. We need lower prices in the oil market. And I suspect as we're coming into the November elections, bottom line, they're going to use everything and anything to basically make sure that the cash is flowing and that these interest rates don't go up so high. Real question is going to be, does the Fed pay attention or not? We'll find out. Right now, the way the dollar is trading, it looks to me like someone's been selling the dollar for quite some time. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, our man, Mr. Steve Rhodes, is going to be doing an outstanding workshop right here 6 minutes from now. Not too late to get into it. The way you do that, come over to our website at TFNN. You'll see featured content, mastering probability. You hit that banner, you hit subscribe. You can subscribe for a month, 6 months, or a year. Comes with a money-back guarantee, 30-day money-back guarantee. Bottom line, Steve's going to be talking about the A to B equals C to D pattern. It's a full hour, starts at 5 o'clock. And if you can't make it live, folks, we'll have it on your page for a full 30 days. That webinar, by the way, folks, comes with 4 other webinars that Steve has done. So you're getting a 5-for-1 deal with a money-back guarantee. Check it out on the front page of TFNN. Remember, Steve is the #1 market timer in the S&P 500 for the last 6 to 7 months. So it's a big number. You want to get into that workshop, check out how he looks at the markets, and you'll basically growling and prowling out here. Market-wise, what we had is this. Looks to me you got NASDAQ, S&Ps, Dow Industrials, small caps, all more than likely in a probable ABC structure on the way down. What we did is we came down with volume the last 4 days. You bounced today with light volume, couldn't hold price. We'll see how it acts as it's going into the B point. King dollar, couldn't hold price. That's trading 95.360. If it gets under 95.07, that brings it in the lower range. Gold, silver, both need a bid. They were up today. Silver is leading gold. Silver's at $14.41. Gold's at $11.93. Bottom line, it did reject lower price. You need a bid. You need wide price spread. You need big volume. Oil numbers, folks, they will come out because of the holiday. We'll get the API tomorrow night at 4:30. We'll get the EIA on Thursday at 11 o'clock. We will have gas out tomorrow. Bottom line, you got a hurricane that's coming into the Panhandle. That'll raise some havoc with the oil rigs as well as gas. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here. Join Jason, 8:30 in the morning. Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.